When working with buyers, in addition to making sure that the buyer's been pre-approved with a reputable lender, you need to make sure you understand the type of loan the buyer is going to be applying for and how much the down payment is. A couple reasons you need to know that information. Number one, it might affect what type of properties they're going to be looking at. Number two, in the contract itself, you're going to have to indicate what type of loan they're applying for and the basic terms and conditions, including how much they're going to be putting as a down payment. The two most common types of loans that you're going to run into are FHA loans and conventional loans. FHA loans are government-backed loan products that are designed to give people an opportunity to buy a home who may not have qualified for a conventional loan. Maybe their credit score is a little bit lower. Maybe their debt to income ratio is not as strong. So FHA loans is an opportunity for some people who may not qualify for conventional. There are a couple differences with FHA loans that you need to be aware of. Number one, the property has to appraise for the full purchase price in order for the deal to go through. And number two, the bank is going to send an appraiser out to the property to confirm that the condition of the property meets all of the FHA standards. And if it does not meet the standards, then the property will either have to be repaired prior to closing or the deal will not go through. Some of the things you would think would be major problems are concerns for FHA, which would be problems with plumbing, a roof, windows, holes in the walls, things like that. But then one of the most common ones that people think of with FHA that's a little bit different than conventional is peeling paint. That's a concern for FHA. With a conventional loan, you have people who are looking to put anywhere from 5 to 20% down, as opposed to an FHA loan where people are putting 3.5% of the purchase price down. With conventional loans, you're looking at more ideal borrowers, and the stronger the borrower and the stronger the credit score, the better the interest rate is going to be on a conventional loan. Now, the bank is still going to do an appraisal to confirm the value based on the purchase price, but the difference is on a conventional loan, if the appraisal comes in short, either you can go back and renegotiate the price with the seller to bring the price down. But if the seller digs their heels in and the buyer still wants the property, on a conventional loan, you can actually bring the difference. So if you have a purchase price of $200,000, it appraises for $195,000, the buyer could bring the other $5,000 from their own savings in order to make the deal go through, which is not an option on an FHA loan. Conventional loan also has standards for the condition of the property, but they're a little bit more relaxed. So the major stuff, if there's a leaking roof, if there is problems with the plumbing, the heat has to work, the major systems in the home have to all work in order to get a conventional loan. So that's why with foreclosures, properties that may be in very poor condition, it's not an option to get an FHA or a conventional loan in some cases. And in those cases, you have to either get a renovation loan or the buyer has to pay cash.